and the future development of the production of wind power installations and units in the Russian Federation, and consequently for the supplies of equipment to the foreign markets. Throughout this period of time, the entire package in the Russian Federation currently consists of 1.7 gigawatt of wind power installations. 6 projects have been commissioned with a total capacity of 720 megawatt. This includes wind farms with a capacity between 60 and 210 megawatt in the southern part of the Russian Federation. The first farm was commissioned in March 2020. And I'd like to draw your attention to the fact that in 2021, the company commissioned 5 wind farms with installed capacity of more than 500 megawatt. Besides the wind power installations, the company is also implementing a number of other projects in the area of new energy, including lithium-ion energy storage projects at industrial enterprises of Rosatom, and we are doing that for other clients. This is also one of the prospective areas for the development of new energy. At the moment, at different types of construction are approximately 900 megawatt of capacity of wind farms in the Russian Federation. As I mentioned, this creates favorable conditions for future development of the business and the deepening of localization of the production in the Russian Federation and entry to the localization of a production of new 4 megawatt units. A comprehensive approach to the development on foreign markets is ensured by a full cycle of the wind farm development. Throughout these years, the competencies in these areas have been accumulated by Rosatom, and that includes wind assessment, site selection, then accompanying the bids to receive all the necessary permits, production of equipment, coordination, and oversight of all construction and erection works at all the types of the project, commissioning, handover to operations, and effective management and maintenance of the wind farm, and working on the energy markets. All these competencies have been well developed, and you can take a look at how they're implemented, and we are prepared to acquaint all the partners, including potential partners, with these competences using our projects in the Russian Federation. Prospective or promising areas for our entry to the international markets currently include the following. Rosatom defined a number of key clusters and countries. There are 2 main areas that we can see for ourselves. Southeast Asia, first and foremost, projects in Vietnam. Vietnam, for us, is at the moment a high priority market for entry to international markets, because this is the country where it is planned to build a significant capacity in the area of wind power. It has good technical and natural potential, and it has a clear legislative and regulatory framework supporting renewable sources of energy. The next priority area for us would be the Balkans, in particular Romania and neighboring countries. On the whole, this cluster is characterized by the nascent stage of the development of the wind power market and ambitious programs to support renewable energy. At the same time, these are European countries, and they have opportunities to receive cheap financing, and this is one of the main topics that Ilya wanted to discuss, that we wanted to discuss as part of our today's panel discussion. And then, of course, we are also viewing the markets of the CIS countries as a part of the so-called domestic market that includes Kazakhstan, Belarus, Armenia, Uzbekistan. These are the countries that are quite close to us. They're quite close to the Rosatom industrial facilities, and they have clear rules for supporting renewable energy. If we were to look at the potential of the onshore wind capacity, then according to Bloomberg, we can see quite a significant potential of growth of onshore wind farm up to approximately 700 gigawatt by 2030. At the same time, the countries that Rosatom considers to be its priority countries have this potential market of approximately 50 gigawatt of capacity based on these estimates and based on the technical capacity and the competencies that Rosatom has. Up until 2030, we have plans to build a 5 gigawatt capacity package on foreign markets. At the moment, we're working actively with our potential customers, with potential partners. Our strategy is entry to markets in partnership with local or international players which are already present on the target markets. Consequently, if we are to consider the cycles, such as the pre-development phase, construction, and operational phase, then we are ready to work with our partners on all three stages. And our potential partners include local developers and project owners, as well as international developers and energy companies, and local and international EPC contractors, and turbine manufacturers. And in this case, I'd like to draw your attention to the following. Despite the fact that we have our own production, we do not limit ourselves to this equipment alone. And whenever entering international markets, we're considering the opportunities to enter into partnerships with other manufacturers of wind power equipment. And consequently, this would enable us to build these wind farms on the basis of their technological and process base. And there's also the export capacity of our own equipment. We believe that this potential is good, and we see prospects for the deliveries of equipment from our plants and our factories. Thank you. I hope that we will have a good discussion on the issues that Ilya has just raised.
As Igor mentioned, one of our key clusters which we plan to go to is Southeast Asia. That's why we asked Nigel who is Managing Director of Charter Trust, which is based in Indonesia and Singapore, to give us his view on the current market situation in the Southeast Asia, the challenges and opportunities of the market. So Nigel, please proceed.
Thank you. Let me just share quickly the slides that I have. Okay. Hopefully everyone can see my slides clearly. So today I will be covering just very quickly because we have a 10-minute time frame. So I'll do a deep dive into Vietnam especially, but I'll talk generally a little bit about Southeast Asia. But before that, let me just quickly give a quick overview of Chartered Trust. Chartered Trust was formed in 2003. We are an investment and advisory firm with a focus on renewable energy, clean tech, and ESG. So we have a strong track record in successfully closing M&A and project financing transactions, especially in Southeast Asia. And in fact, just last week, closed the refinancing of the hydropower business plant in Indonesia. So if anyone has any questions in the future about project financing, refinancing, development projects in Southeast Asia, please feel free to reach out to me. My sector focus is in wind, and solar and hydro, with a little bit of waste to energy as well. Okay. So before I go into Vietnam, and I'll explain a little bit about Southeast Asia and why I focus specifically on Vietnam in Southeast Asia, specifically on the wind sector, right? In Southeast Asia, the two largest renewable energy markets would be Indonesia and Vietnam, right? With Indonesia, of course, with a population of roughly around 250 to 260 million people. And Vietnam with close to 100 million in terms of population. So these would be the two largest countries in Southeast Asia, which also would explain why the energy consumption would be the highest in this part of the world. So, but having said that, the renewable energy focus, it would be higher in the immediate future in Vietnam compared to, say, somewhere like Indonesia, for a few reasons, which I'll explain shortly. But essentially, when I look at development potential, it is basically in the next, say, 3 to 5 years, where you're going to see a lot of opportunities, where PPAs can be closed quickly, where you have land acquisition that will be, can be done very quickly as well. Whereas while Indonesia has a high potential, some of these, especially the land acquisition regulations and also the PPA from execution to the actual signing of the PPA is actually taking a bit longer than most other countries, especially say Vietnam. But I will talk a little bit about the challenges that you will face in Vietnam, especially if you're a new developer in Vietnam. So with this, let me talk a little bit about Vietnam in particular, right? As I mentioned, right, it's got a very high population, close to 100 million people, right? And that's growing by 2 million per year. So there is a huge energy consumption requirement. And the Vietnam, right, MOIT, right, which is the ministry that's in charge of renewable energy in Vietnam, right, has come up with a power development plan. Right now, we are at what we call PDP 8, right, which hasn't yet been issued. That's been outstanding since a year and a half ago. And that's the plan that basically lays out the feed-in tariffs and all the key regulations in terms of the economics, like the tariffs for PPAs. And also lays out, how many gigawatts would be going to wind, to solar, and all the other power mixes. So this gives you a very quick snapshot of the power mix in Vietnam as of 2020, where you have installed capacity of 69 gigawatts. You can see majority of it is actually still in coal and hydropower. Now, hydropower in Vietnam, majority, not run of the river, right? They are typically basically a dam, so not exactly considered green, right? And some of it would be in gas and diesel. But so solar has been the largest renewable energy mix in Vietnam so far, with wind being the next upcoming renewable energy source that is in a huge plans coming up in PDP 8, as well as in future power development plans in Vietnam. So just to quickly show you what the power mix would be in 2045. So Vietnam, when the ministry comes up with the power mix, they come up with like the power mix in 2020, 2025, so every 5 years, right? And by 2045, this is the plan. So just to show you quickly again, in 2020, right, you can see coal is at 29.5%, whereas in 2045, it's meant to be dropped down to like 17 to 18%, right? Interestingly, gas and diesel, which is roughly right now about 13%, right, goes up to about 24%. Reason for that is there is a lot of plans by the Vietnamese government for gas to power. So that is also an interesting development for a lot of developers in the gas slash LNG or even LNG to CNG to power, and maybe potentially even blue hydrogen, right, in the power mix for Vietnam. But you can see on the right-hand side, renewable energy is going to be, take up or close to 50% of the power mix by 2045. So there's going to be a huge focus on renewable energy, and solar is more or less saturated already in Vietnam. You're talking about the ground-mounted solar farms, and that is now being overtaken a little bit by the rooftop solar. So a lot of focus now is on onshore and offshore wind in Vietnam. Okay, so this is just a little bit in terms of the numbers that you'll see in terms of the solar and wind power in Vietnam, right? Just looking at the lower panel, which is on the wind side, you can see there's a huge increase that is expected, right? From 20 to 25 to 40, 2045. So you can see, at least a 41 to 47 gigawatts expected in terms of wind power for Vietnam. Hence, and just to give you a little bit of example compared to other countries, Indonesia, you wouldn't even get close to 1 gigawatt, right, by 2030 in terms of their power development plan. So it's a huge potential in Vietnam compared to any other country in Southeast Asia. So let me go through very quickly what the current situation is in terms of the wind power in Vietnam. So the FIT 1, right, which is the feed-in tariff, right, expired in end of 2021 or October 2021, right, for wind. It was basically around about 8.5 cents for onshore, and then offshore, which is more near shore, right, is around about 9.8 cents. So this has expired, and we are actually waiting for PDP 8, right? And it's moved quite a bit, but currently we are expecting the PDP 8 to be finalized and issued probably by middle of this year. So we would have a little bit more clarity in terms of where the feed-in tariffs would be probably by middle of this year. So to date, there are over 70 projects commissioned. Now, the number that you see over here, which is I have put it as 3.7 gigawatts, it's actually higher than what is official, right? But this is basically based on my own compiled private list of this project by project, all the projects that I've listed down, and these total more than 3.7 gigawatts. Of course, I can share these with anyone who's interested, who can contact me, after this. So most of these are actually onshore and near shore, but you are going to see a lot more that are going to go offshore, especially in the coming few years. So for those who are in the offshore wind industry, right, I think I would say that please pay a lot of attention to Vietnam, right? The market is very fragmented, right? There is no single company that owns maybe more than 200 to 300 megawatts. So there is actually a potential for consolidation, and I have looked quite closely into that, where there is a significant potential to actually aggregate, a few of these 40 to 50 megawatt projects, and you actually have, could control a significant share of the wind market in Vietnam. So, but of course, the important one is returns, right? For most people. I would say that the equity returns or the project returns as well, right, for Vietnamese wind projects have dropped a little bit over the years. It's come down, say, roughly around about 2%, right, over the last 3 to 4 years. So, but therein, that's why lies the opportunity for aggregation, where there is opportunity for financial accumulation and basically issuing green bonds and other financial structuring to actually help increase your equity IRR. So so that's the state of play for the current situation in Vietnam, where you would need to be prepared for a project IRR of probably around about 12%. Right, on an equity IRR, in fact, 10 to 12 probably, and then on an equity IRR, possibly anything between 8 to 10. again, depending on what your debt financing or your project financing is. There's quite a lot of foreign investor participation and interest going forward, as 100% foreign ownership is allowed in Vietnam compared to most other countries where there is a limitation in terms of foreign ownership of projects. So in terms of the type of financing that you look for in Vietnam, a lot of them are still onshore debt, i.e. domestic banks providing project financing, right? These are at a base rate of 600 to 650 basis points. In fact, that is on the low side. Some have gone, in fact, majority have gone up to around about 800 to 900 basis points, which of course eats into your equity IRR. So where if there are any EPC players that are on this forum as well, one of the things that I would actually say is that there is what would give you an edge would be an EPC plus F type of structure, right, which helps reduce the financing cost for the project developers. So second bullet point, curtailment, right? Curtailment is quite an important aspect that any developer needs to think about, especially in Vietnam, because and this is actually one of the issues which makes the PPA in Vietnam non-bankable, because there is curtailment, right, that is allowed in the PPA, and that's actually borne by the investors or the project company. So the issue with that is basically you don't get paid, right? And that there is no way for you to get anything back if EVN basically decides to curtail your power, right? There have been cases of that already. So that's something to be aware of. But again, that's where a little bit of local knowledge helps, because you need to know where. The second part is actually the more prevalent, which is where it's technical curtailment rather than due to the grid congestion, rather than curtailment from demand, right? But there has been curtailment from demand, right, due to COVID-19 as well. So I have mentioned, right, that the PPA is not internationally bankable. Hence, a lot of the financing has been done through the local Vietnamese banks. And again, one of the key issues also, apart from curtailment, is basically no step-in rights for international lenders. So, okay, let me just quickly flip through the next slide. So market, right, was pretty much driven by FIT, right? Given the uncertainty, and PDP8 that's not yet been issued, so there's been a little bit of slowdown recently by foreigners, as they await the news on the latest FIT. But the anticipation, anyway, which is my opinion, is that there will still be a FIT, right, issued for wind projects. It will be lower, right? But I think the focus, given that the focus, as you can see previously from my slides, that there will be a push for offshore wind, and therefore there's probably anticipation that there will be some FIT for offshore wind as well. I won't speculate how much that FIT would be, but I personally think that it should probably be at least in the 8 to 9 range. So in terms of turbine suppliers, we've mostly come across Vestas. GE has seen some limited success. We have seen also some Chinese suppliers such as Goldwind, although they have been slow to do the EPC plus F financing, due to maybe some of their own internal restrictions. Okay. So overall, I would say that the Vietnamese wind market has a lot of potential. For both EPC and non-EPC players, pure developers, all right, there is a strong potential for increasing the gigawatts required in Vietnam. you need to couple it with some vendor financing, right? Because I think that is what is really critical in Vietnam. It's the key. Is the financing. So the other potential as well is the potential to consolidate the market. There are a couple of projects right now which are already operational or near operational, which are actually potentially for sale. Potential to actually consolidate these, acquire these, and actually develop further. And that's you know, that can actually take you very quickly from, you know, anything from 100 megawatts to 400 to 500 megawatts in a very short period of 3 to 4 years. So that's my time. This is my contact details. Please feel free to reach out should you have any questions.
Nigel, thanks. It's a very comprehensive presentation. You actually answered all my questions in your presentation, so I don't have any. Thanks a lot. So we will move to our next presenter. Last year, Turkey planned to hold the third leg of the wind energy tender EECA 3 for 2 gigawatts capacity. Unfortunately, due to economic situation, this tender was postponed to this year. Last tender in Turkey, which was held like a couple days ago, ended up with price like 35 to 40 US dollars per megawatt hour. So we have here Mr. Umit Yamanturk, member of the board, deputy general manager of Girish Holding Turkey, the company which holds comprehensive portfolio of assets in different energy sectors. Dear Umit, could you please give us your thoughts on the Turkey market and the possibility of making projects in current situation?
Yes. Can you hear me?
Yes, we do.
Okay, your voice was a bit not very well. Okay, let me give you a brief outlook on Turkish market. I will be speaking from the practical point of view, so not much theoretical knowledge here. What we have encountered living through all these times. Let's start with the last decade, which saw a very robust increase in renewable capacity in Turkey, and it ended up Turkey outpacing world average. Actually, maybe I should also share my screen, although I don't have much. Still, okay. So Turkey actually, using that decade, outpaced global average, and it became the 5th biggest market. And I should also step back and tell a bit about our company, because we were here from the start in the wind market. We are the biggest wind investors in Turkey. Overall installed capacity that we have is 1,100 something megawatts. Biggest chunk is wind, with about 800 megawatts. And we have 260 geothermal and about 100 megawatts small hydro. So we started our investments in Turkey with wind like 13, 14 years ago, when the market was just opening. I mean, in the good old days when you don't even have to bid to have the licenses. So it started from there, and we have been investing successfully. I will explain why in a bit. And then in the last 2-3 years, we have extended our operations to the neighboring countries. First Kosovo, almost the same time, Kosovo and Ukraine. We have 2 running operations there, and we are trying to build some more in the Balkan region. We have an ongoing project in Belarus. This is in a snapshot the energy sector of our holding. Actually, our holding is much bigger. It has construction and industry, but that's not the point here. When the tenders for PPAs were successful the last decade, so we had relatively low feed-in tariff figures back then. When it started, it was 5.5 euro cents. If you think about like 10 years ago, it was in the very low end. But I think it was very important because it provided a robust increase, not only looking at the feed-in tariff, so you have to have a good project too, but it was also backed up with a PPA, so it was always very easy to finance in that in that decade. So then, of course, the tender started. FIT period ended, and YECA bigger tenders started. This is actually, I will give a bit of information on that. This is after FIT period. This is also tender for PPA, but bigger tenders. There have been 3 successful ones are already executed. These were denominated in hard currency. That's important. I'll talk a bit about that. The downside of and these were successful, maybe too much successful, as you'll see. The prices come down very fast, very fast. So if you look at it, for example, in the 2017 tender, you are looking at 7 cents. So it is pretty much what we had in the earlier ones, but this included deep localization. So the companies, the joint venture who won the tender had to build actually factories to manufacture. This is good, maybe from public policy standpoint, but this is not very good from the financing point of view, because all the bigger international finance institutions not very much like that approach. So that actually gets you to the local market, that confines you to the local market, if you ask me. Then we had the second one, onshore. That was where the prices started coming very fast, very deeply. As you'll see, it is 3.48 cents per kilowatt hour. So here, Siemens and a Turkish joint venture won this tender. They are already doing investment. They haven't started actually producing electricity, but it will happen. And the first one, the solar one, they have already finished 400 megawatts. So it's successful and producing. The second one, successful, ongoing. But as I said, the downside was the financing factor. Then we had one more onshore tender, again denominated to hard currency. These also saw pretty competitive prices. And the market it was hungry for more, and including us, of course. But then macroeconomic problems started in Turkey. Maybe all of you have heard of it. The currency lost by 50%. It gained some in the last 2 or 3 months, but right now we are looking at 40% of loss. And after these 3 big YECA tenders, Turkey tried to tie the PPA, the feed-in tariff, to 52% to Turkish lira. That was a very good, maybe again, step for the macroeconomic reasons, but it made, it made it very, very difficult to finance, of course. And right now, with this currency shift, they have, they have to postpone the tender. Now, I know, there is a work within the ministry. They are trying to fix it to hard currency a bit more. So how was it? It was 52% tied to hard currency. 48% tied to hard currency and 52% to inflation. But when you are getting like 70-75% of your costs on hard currency, you can imagine the exposure. Huh? So that's why it was postponed. But we are talking with the ministry. The associations are talking with the ministry. I think we will see in short time some good news on this, and the market will start working again. This is the tender news. The drop in the prices are the same. This is from IRENA, actually, as we can see. Pretty much Turkey follows global trends. It's a very competitive market. But now, what is important, I think, is with the COVID. We have been trying to do 3 projects during COVID. One has finished or is already finished. One is about to finish. So everybody is used to seeing those graphs, like cost is going down, PPA going down. But now with the prices of the raw materials, it's very, very difficult to predict. And on top of that, the transport. If the transportation prices have gone up like almost more than 50% in lots of areas. So now I think we'll be seeing some at least freeze on the decrease on the cost side. For Turkish market, it's good that the price is tied to inflation, but still it has to be tied both to inflation and to some extent to hard currency. And we will have some good news on that, I hope. Now, there's one last issue that I wanted to talk. It has been, throughout the world, in the geographies, in the countries that we work, except for the last 2 years, it has never been a problem to finance the projects. It has, because of all the liquidity in the market, plus everybody coming to understand the importance of Green Deal, right? But still, at times, you have to get a debt to equity ratio that is not very, very good. Sometimes we have to do that in crisis. You have to go work on the equity side a bit more to make the projects happen. So that's additional risk. Of course, you have to get a bit more additional return on that, but that happens. If you ask my opinion, what happens in the next year, it all depends, I say, on the raw material prices. The demand is there, the knowledge is there, everybody is super motivated, but the main thing is our, as investors, and we are also an EPC company. We do all of our investments by ourselves, built by ourselves. Impossible to foresee the risk, to allocate the risk with the current situation. So we have to have a look at the health side, COVID side, I suppose. That is, I think that's all I wanted to say. If there are any questions, I'll be happy to answer.
Umid, thanks a lot. That's a really good presentation. Could you just answer maybe one small question from my side? We saw that YEKA gas tender, the last solar tender in Turkey, it was a really fierce competition, like 200 applications for, I guess, 40 for the whole country. Do you expect that the new wind tender will be the same, or it will be like held, or only big names who already has capacity in Turkey will come and win?
I mean, there is huge, but with all the problems, still, with all the problems that we have, the appetite on small investors in Turkey is unbelievable. There will be, I mean, if you have small, I mean, they are divided into two, small scale YEKAs and big scale. If they go for small YEKAs, there will be fierce competition, and the international players, I mean, they are not interested in like 10 megawatt projects anyhow. There will be fierce competition. With the big ones, big scale YEKAs, it depends on the two things that I said. I mean, the hard currency is it taken care of enough? I mean, you don't have to tie it 100% to my personal opinion. You don't have to tie it 100% to the hard currency, but you have to tie it to the extent that you are buying turbines or buying steel. If that's taken care of, I hope it will be, we're having talks as well, then the competition will be there. It won't be it won't be like Ukraine, where you have less competition, the profit margin is high, super risk. No, Turkey will be less risk and smaller profits in between Europe and let's say the periphery.
Okay, thanks a lot, Umid, for your presentation. We'll go to the next speaker. Another rapid market for the wind energy is South Africa. I want to welcome Ms. Pam Papapetrou, founding partner of Infra Impact Invest Managers, who will give you a presentation from the investor side outlook in South Africa. Pam, the floor is yours.
Hi, everyone. Thank you for having me today. I'm going to just share my presentation quickly. So I'm going to be sharing a few slides today on the South African market, and specifically an equity investor's perspective. First, to just give a quick overview on Infra Impact. We're an independent investment boutique and a specialist impact manager. We focus on 4 key infrastructure sectors, specifically energy, water, waste, and telecoms. We've been involved in the renewable energy sector for 20 years globally, and in the South African market specifically since the inception of what's known as the South African Renewable Energy IPP program, which started in 2011, and we've been integrally involved there since its start. We've got a singular mission. We invest in beneficial businesses and projects. We generate attractive risk-adjusted returns for our clients, and we deliver a positive social and environmental impact. In terms of renewables, we've invested several billion rand into nearly 2 gigawatts of both solar and wind projects in South Africa, and we've invested across the capital structure, senior debt, equity, mezzanine debt, as well as financing, community trusts and Black economic empowerment vehicles that are conditions of participating in the South African market. So today I'm going to speak specifically from an equity investor's perspective. Firstly, I just want to share a bit on the evolution of this program. So, in the time that we have, I can't go through all the details on the South African IPP program, but to take a step back, it's a competitive tender. It was launched in 2011 after about a decade of kind of the South African government having these ambitions to launch, either a refit or some kind of program. There were 2 refits that kind of failed before this renewable energy IPP program came to fruition. And it was really a combination of increased pressure to decarbonize South Africa's power supply, as well as needing to keep the lights on. So for those familiar with the South African market, we have load shedding here, which regularly our lights go off because we do not have the power supply. But at the same time, we have a very strong wind resource and solar resource here, making renewable energy power generation both attractive from a cost perspective and an availability perspective. So when the South African government launched the renewable energy IPP program, because it had taken so long for them to do so, they said, we're going to do this in a very sophisticated manner. We're going to develop this program to the highest standards from a financial, technical, and legal perspective. We have an internationally recognized PPA. We keep bidders whole across, your currency, your interest rates even. It has inspired a lot of investor confidence, and it's one of the most sophisticated programs, I believe, globally, which is great for the conversion of projects to renewable energy generation, but it has resulted in the onus really being on the private sector and developers. So before you bid, you essentially need to have a shovel-ready project. It needs to be permitted, the land needs to be secured, you need to have O&M and EPC heads of terms already secured with some sense of your pricing. You need to have an audited financial model, you need to have a grid connection. So the private sector did respond to this, and with the plan over the next 10 years to add 25 gigawatts of renewables onto the grid, international players became instantly interested in this market, and guys came in and they bought up a lot of sites, they invested into South Africa. And what we saw in the latest round, which was awarded in October last year, was great results for the economy, but possibly challenging from a fierce competition, as you said earlier, for developers and sponsors. So I've put on this slide, an evolution of your bidder success rates, going down below 20% in terms of projects bid versus awarded. And in terms of round 5, you actually had a little bit of a benefit because on the wind side. And I think this was largely due to a dearth of sites where there was grid connection available. So there does seem to be an opportunity on the wind side still, even though the competition is fierce, if you can find the right sites and you can develop them in time. The plan is to add 1.6 gigawatts of wind every year for the next 10 years. So it's certainly a market to pay attention to. So to give you a sense of what's happening now in this latest round, the tariffs were low. They were bid below 50 cents. I think the wind weighted average tariff, and this is in Rand terms, was 49 cents for wind. Project equity returns were also quite low, hitting single digits. And this was largely because it had been 7 years since the last round and projects were awarded. So, sponsors and developers who had sunk costs into these developments really wanted to put their best foot forward to win an allocation, because if you don't win an allocation in this round, your grid connection may go to another party, and then your sites or your investment becomes worthless. So we saw developers really getting quite aggressive on tariffs, but we still saw significant appetite and interest. And I think equity investors and debt providers really came to the table and sharpened their pencils to give the best cost of financing that they could to support those low tariffs. And also what we saw were clusters bid. So the program allows for 140 megawatts, it's the cap for a wind project. So what we saw developers doing was buying up kind of larger tracts of land so you could amortize the cost of development across a greater generation base, as well as some of your other costs that might include your grid connection, your O&M costs, even your EPC, obviously just taking advantage of those economies of scale. And what that resulted in was 3 or 4 sponsors really taking the lion's share of the allocation. So I'm going to talk a little bit in terms of the equity return and how that's evolved from round 1 to round 5. So if you were lucky enough to participate in round 1, 18% is actually quite a conservative number there. Guys really came off in round 1, with 30 or 40% IRRs post-exit. And those IRRs were extremely healthy. You had projects that were based on P90 assumptions where, you had trapped cash, you had maintenance reserves and debt service reserves, and you were just getting that return solely from your dividends and your shareholder loans. So obviously, given this increased competition, equity returns were under significant pressure and sponsors were looking for other ways to augment that return in order to participate. So that included, I think most of the successful parties weren't just involved in owning the asset. They were involved in the EPC management or the O&M, the asset management. They may have been involved in earning some development premium out of the project. And sponsors were getting quite creative in terms of assuming additional income streams. So could I sell off some of this power to a private buyer? Could I wield the power through the grid and sell it to another party? And some of this is a bit questionable in terms of what you're allowed to do from the program perspective, but there was certainly a lot of additional concepts that were brought to the table by the private sector in order to make the bids all the more competitive. Terminal values were also considered. So it's a 20-year PPA in the Renewable Energy IPP program. It was not uncommon to assume at least another 5 years of operation. And obviously, you could increase your IRR quite significantly depending on what you assumed that post-PPA value would be. And I guess from an equity investor's perspective, given this kind of advancement where you've got 90% leverage, you're making assumptions on P50, it's quite razor thin, your returns. So it left a lot of equity investors wondering, is this reasonable and in line with the risk profile? Can I get a better risk-adjusted return investing in other assets or other pieces of the pie? Is it better to be in the senior debt where at least you have security? But I can say that the South African infrastructure market seems to still be participating at these lower returns, and capital continues to be raised at these lower return levels. And I think that speaks to the investor confidence that has been grown over the last 10 years in the South African Renewable Energy IPP program. I won't go through this in too much detail, but obviously as an equity investor, you can't consider that return. I speak in terms of 9% or 18%. You can't consider any of that in a vacuum. And you have to look at kind of your relationship with interest rates and CPI, of course, in which the tariff is indexed to. So in the South African context, what the DOE, the Department of Energy, does is they give you, they make you whole for changes in your currency. So to manage that mismatch in terms of your 60% of your capital cost is in dollars or euro. If the currency moves against you, they will make you whole so you get your same return at financial close. And financial close is usually in quick order from bid because these projects are shovel ready. So the round 5 projects are due to close in the next few months, April to June 2022. So the one thing that they hadn't done from the inception of the program was to keep you whole for also changes in interest rates. So in the first chart on the left here, you can see you might have someone preparing a bid and putting in a price where interest rates were as low as 6.5%. But then by the time financial close came around, the interest rates had jumped up 200 basis points to 8.5. And obviously that has a significant impact on your equity IRR and can have as much as, I think in this case, it was nearly 300 basis points impact on your equity IRR. So now what the DOE does is they give you rates to assume, as well as a curve, a forward curve. So you input that into your financial model that you submit at bid, and that helps it helps the sponsors obviously absorb those movements in interest rate. So what we had in COVID was a situation where interest rates are very low, but your forward curves are steepening at quite a rapid rate. But at the same time, the DOE gave you these forward curves that had this staggering increase in rates, but they said assume a CPI of 4.5% flat. Now, obviously, the CPI and your interest rates tend to move in tandem, and there's a correlation there. So where sponsors and bidders may have been quite smart in terms of applying their minds is possibly to have made some assumptions on that CPI curve so that it moved in a more correlated manner with interest rates. But it's another point to make in terms of some of the inconsistencies on the South African market and what you need to consider as an equity investor. Historically, in the South African market, a big part of investing in renewables was the capital growth play. So as an asset manager, you take that construction risk early on, you get involved pre-bid, and then you sell your assets to a large-scale infra investor and you get that benefit of the yield compression. So maybe you invest at 16% and you sell down at 12 or 13%. Now, if projects have gone in at 9%, there's a question in the market to say, is there going to be any capital growth? Is someone really going to come in and buy out these projects at 7 or 8% in order to get kind of an attractive multiple of money or IRR from these projects? Or is it really just a long-term yield play? And it's also left equity investors thinking, where else can I invest, let's say in a wind farm, and find that return? So as I was saying, wind farm development is quite an attractive place at the moment in South Africa. There are more and more equity investors who historically have not invested in kind of the riskier phase of development, now looking at that piece of the pie and saying, okay, well, if we can find good wind sites where there's spare grid capacity available, and given the timelines also to develop those projects, we need to do it now. We're seeing it already. There's a dearth of wind sites actually fully developed where there's grid connection. And if we're going to add 16 gigawatts of wind onto the grid in the next 10 years, because we also need it from a power perspective, let's get involved in earlier stage. Let's do the ground measurement and the bird and bat studies. And you're seeing more and more growth in that side of investment. But it's just a cautionary tale to still be aware that this does carry additional risk and some binary development risk as well as timing risk. And I've put a table there to kind of compare the characteristics when you're an equity investor of considering investing in development versus something like asset ownership or the O&M and asset management. In addition, we are seeing deregulation in the South African market. There used to be a constraint where you needed to get a generation license if you were going to build any site over 1 megawatt. They've changed that restriction to 100 megawatts. So now you're seeing a significant growth in the commercial and industrial side. Regulation is obviously still necessary, but I think what we're seeing is the market is moving beyond the renewable energy IPP program. I think it was a great start. I think it inspired the right investor confidence for a country like South Africa. And we can take, PPAs or different parts of that well-structured program and use them in the private sector. I think some of the challenges that we're finding is obviously your PPA mismatches. So a CNI consumer may not want to sign a 20-year PPA like the South African government. But we are seeing aggregators and other innovative solutions kind of coming with ideas around that. And we are allowing the market to innovate. And I think the last challenge is really financing transmission infrastructure. We have so many shovel-ready projects that, if they had grid connection, could deliver power to the grid at a cheaper cost than ESCOM, than our national utility. So if we could come up with a solution to building that infrastructure, whether it was a somewhat private, public solution, it would really unlock a lot of renewable energy generation for the nation. So lastly, demand for assets from equity investors remains strong despite reductions in yield, which is a signal from the market that the REIT procurement has investor confidence. We've had record reductions in tariffs and more affordable clean energy generation. And our market will continue to evolve with a focus on private sector procurement outside REIT. And at the impact level, equity investment in South African renewable energy generation is helping to alleviate our current power crisis while reducing our emissions. And continued equity investment in wind farm development will help South Africa bridge a significant gap in inequality and create a sustainable energy future. So thank you very much for your time. If you are interested in the South African market, you are more than welcome to email me for additional details. And I hope this helped shed some light on what's happening on this side of the world.
Yes, Pam, thank you. Unfortunately, we are a bit late, so we don't have time for additional questions, so we need to go to the next speaker. Guys who are still who will present right now, can I ask you to stick to 10 minutes each one, because we have the next panel after us. So, as we can see from the presentations, the IRR rates for the equity investors is getting low. So, we as Rosatom financed our first projects with traditional project financing, but we had good tariff in Russia, and also the rates was quite low. So, we was okay with that. So, but right now we are looking at the new sources of the financing, and when we're thinking about them, first thing that comes to our mind is debt capital markets. That's why we asked Denis Shulakov, who is first vice president of Gazprom Bank, to give us his thoughts on the possibility of getting debt market instruments to the financing of the wind projects. Please, Denis, proceed.
Thank you very much, Ilya. You can put my slides on the screen.
Yes, it's
ladies and gentlemen, good afternoon. Maybe the first slide. It's a rare opportunity when the industry and finance talk together, and we all talk remotely. Therefore, I'd like to be as sharp and precise as possible. Why we agreed to step in and support Rosatom? In many aspects, Rosatom is, in fact, the Russian national champion of wind. You've heard what they've done in Russia, but is it all? No, I think the company played the key role in development of Russian capital markets by issuing the really well-accepted and well-traded instrument in the Russian local capital market, namely green bond, to refinance the construction cost of wind power capacity they install. But I want to give a little bit of wider background, why we are doing this, and why is the transformational impact of wind power industry is so tremendous. If you look at the left top graph, the number there, 122 trillion, is an estimate which, as of last year, appeared on many screens and presentations, but not necessarily all of us know of this. This is the estimate done by BCG and Global Financial Markets Association of how much funds will be needed, how much investment will be needed to turn the world by 2050 for the net zero economies. And then they split it across the regions. And on this graph, we show the regional split, including country where I'm coming from and Rosatom is coming from. But if we make a step down, we will see that the corresponding number is almost equal. What is this corresponding number? This is the number of investment, institutional investors who put their signatures under the UN responsible initiative, responsible investor initiative, and the amount of total signatories exceeded 4,000 institutional accounts. All of them are the participants of the global bonds, many participants of equities, and some participate in the structured finance and loan market as well. And as of next year, the proportion of assets under management of those investors who signed these principles will be 90%, which needs to comply with the ESG principles and guidelines. And now we see there is a huge gap of instruments available. So 122 trillion to reach the goals of net zero, almost the same number of assets under management of already existing investors who signed the principles, shows the capacity in terms of fund. But what is lacking? Obviously lacking the assets in terms of physical world and in terms of financial assets corresponding to those projects which fit the purpose and fit the SDG development agenda. I very attentively listened to what Palm and Nigel and Umit were talking about. And obviously, wind power industry is to the extent facing its own challenges. But when it is wrapped up and financed and went through the first stage and is ready for the capital markets, I think it's becoming the sought after asset class. And you see how quickly develops, if you look at the right top graph, how quickly develops the market. We're talking only about the debt capital markets, the public instruments. Last year it exceeded 1 trillion, but it's still a drop. If we look a little bit further on the next slide, I will tell you when to turn it. But before we go into that, last graph down on the right, it is actually the summary of the 4 key technologies which people see as crucial for the development of the economy globally and achieve the net zero situation. And renewables is one of those 4 cornerstones. Next slide, please. Can you put the next slide?
Yes, it's on. It's next slide.
No. I don't see it on the screen.
Well, it's slide 3 on the screen right now here.
Okay, thank you. Okay, on the slide 3, which is on my screen, but I believe what you see on the left top graph, it's again the same number, 122 trillion, but split in a slightly different way. It's split in a way to show you the instruments, so the capital structure and financial participation in those instruments, of course, differ, but bonds are playing the key element of this. And as I said, the gap is huge. On the previous slide, I told you the last year new issuance exceeded 1 trillion, and what is needed probably 42 trillion. Of course, not of all those bonds will be in ESG formats, but all of them will be needed to support the transition to the net zero economy. Why I'm talking about this? Because it's a global perspective. That's where the funds are moving from and to, on one hand, and where the flow of thoughts and talent is moving to. On the down graph, on the left side, you would see that transformation of oil and gas industry, which is very relevant to the case of Russia and maybe North America as well, is crucial in terms of perception of the companies, and they're changing the perception stand they are in from oil and gas to energy. And wind energy is that crucial element that they all want to participate in when they say that they're developing the renewables parts of their industrial capacity. And you see all top names here, from NL to British Petroleum, they all mentioned. Good news is that thoughts in financial world are also developing fast. And what started as a pure green financing obviously quickly hit the limits, because when you are in carbon intensive industry and you want to develop the purposeful new projects which are linked to the green or renewable industry, It doesn't change the overall position of the company, which is still carbon intensive. And that thought came originally very early to the leadership of Enel. This company was the forebear, the pioneer of SLB financing, sustainability-linked financing, understanding that the energy mix which they use for the fuel for imports is different, including the thermal coal, and therefore they cannot qualify in the future for the pure green perception. And therefore they need to be new format of the financial instruments. And on the top graph on the right side of this slide, we show that from that moment, the thought process accelerated, and now we have in the portfolio of instruments 2 or 3 new asset classes, in addition to green bonds and sustainability bonds, which is a mix of green and social. Now you have the KPI-linked bonds called sustainability-linked bonds and transition bonds. The last one is particularly relevant because it enables the companies which are engaged in the very intensive, carbon-intensive industries like coal mining, like general mining companies and oil and gas companies to step on the transition path, adapt the strategy, scientifically based strategy of climate transition, and on that basis issue transition bonds. Many of them will be linked to renewables. And that's again, last point on that slide at the top, the down right corner, showing that the renewables hit the screens and hit the points of most relevant goals from those 17 UN Sustainability Development Goals. And it shows the frequency if we only take use of proceed bonds, namely green and sustainability bonds. All those, one way or another, relate to renewables. And next slide, please. Starting my presentation, I said that Rosatom is the Russian national champion in the wind power. And how that reflected on the impact and why we think it's very important to share it with you. Russian market is part of the global capital markets. All the rules which we apply for the Russian capital markets are not different. The best practices were installed in the Russian market. That's Euro-clearable, almost 50 billion equivalent of international investor funds invested in the Russian ruble-based government bonds, and some funds invested, not many yet, but invested in the corporate bonds. And we think that the gap in the funds, which I mentioned on the first slide, the gap of investment, looking for the opportunities, can be met by supply from different corners of this world. And this case of Atomenergoprom, which is a subsidiary of Rosatom, we used for the financing, is a good example where the opportunities can be presented for the investment not only by local investors, but by international as well. And I'm sure that Rosatom would not consider me speaking if they were not to consider the opportunities for further issuance in this field, and inviting international investors, not just the cooperation partners from the industrial perspective, to share in this opportunity which they outlaid in terms of industrial agenda. But I can only say that was hugely successful deal inside Russia. And for the first time in the local capital markets, we saw the case of Greenio, where investor participation enabled 3 times review the price, tighten it by 30 bips, and in the end, price it just inside 70 basis points over the sovereign curve of Russia. With that in mind, thank you very much to all of you, and we would welcome follow-up questions and opportunities to engage in projects with Rosatom in financial field and capital markets. Thank you.
Yeah, Denis, thanks a lot. I have one small question, if you allow me. Do you think, is it possible to do something like maybe loan participation notes or credit lending notes to finance the exact project in wind industry? Not like they refinance the portfolio of projects, but attract the investors who usually invest in the bonds to the some sort of bond which will finance exact project in the wind. For example, building the wind farm.
The short answer, yes, there are examples of project bonds. The long answer obviously will require the assessment of currency situation, market and offtake, all those things which are relevant for the project component assessment. But we are very optimistic in terms of takeout by investors of any instrument right now, which can be structured in the format of the bond listed and verified by third parties, which are important, which is an important element, verification. And in a sense, most of the ESG financing right now is project-based anyway. You are unique, being in position where you had the portfolio of existing projects, and therefore it was a grant, effectively, a gift given to the investors to buy into the opportunity to have the wind power projects. Many of them are in the development stage, and I hope the thought of the investment community is developing to accept the project bonds as a new asset class. Ideally, listed on the international exchanges like Luxembourg, with double listing maybe in Moscow. And of course, it depends on the choice of currency. If it's ruble, of course, in Russia. It is, if it is other currencies, it can be done internationally. And we strongly recommend to consider Luxembourg in exchange for these purposes. We're in dialogue with them. Thank you, Ilya, for this question.
Yeah, thank you, Denis. So moving forward, of course, we're also looking at the development institutions, and we have here Ms. Mihek Marvaha, who is from Asian Infrastructure Investment Bank. Please, the floor is yours.
Thank you, Ilya, and good afternoon to everyone. This is a great opportunity for us to interact the banking community, the lenders community, along with the developers, and it was good to hear interesting perspectives from Turkey, Vietnam, as well as South Africa. So I would just quickly give you, we have paucity of time, so I would just make this short. Many of our thoughts are overlapping with what the previous speakers have said. I would just give you a brief perspective of who we are and what we do. So we are a multilateral development bank. We are about 6 years old, Asian Infrastructure Investment Bank. We are headquartered in Beijing, and we have a mission to fund infrastructure for tomorrow. So we basically fund all infrastructure sectors and eligible other productive sectors. We invest in infra projects throughout the spectrum, which meet our high international standards and deliver social, environmental, and economic benefits. So we have 4 major thematic priorities, most of which will apply to wind energy projects. So I will briefly take you through them. The first one is green infrastructure. So we actually help our member countries in achieving their local and national environmental and development goals, and especially their commitments under the Paris Agreement and the United Nations SDGs, the Sustainable Development Goals. There's significant overlap in that. The second thematic priority is connectivity and regional cooperation. So we facilitate not just transport connectivity, but also energy connectivity, and in their digital dimensions, we try to promote digital integration across Asia and beyond. The third one is technology-enabled infrastructure, where based on the enhanced recognition of the important role that technology plays, AIIB supports projects where the application of technology delivers better value, efficiency, and also helps in more transparency and better governance across the project value chain. And lastly, we have private capital mobilization. So we support projects that directly or indirectly mobilize private financing into sectors within AIIB's mandate. So coming to wind, basically we have a I don't have a slide on the wind, so you can let this remain. So we have a major focus on clean energy, like our previous speaker from Gazprom was also saying. Going forward, there's going to be a renewed focus on, and very strong focus on green energy areas, such as financing solar and wind projects. We have a good investment track record in wind. We have already funded a 100 megawatt wind project in Kazakhstan, which is the largest in Central Asia till date. And we also have some approved projects of more than 500 megawatt, which are funded through our on-lending facilities with financial intermediaries. We have many other wind projects in the pipeline. I can name a few for you, although they are not yet formalized. They are in Azerbaijan, in Uzbekistan, also in Vietnam, which is a focus area for Nova Wind and Rosatom. So our products, the major products that we offer to our wind energy developers so far are loans, which are either sovereign-backed financings or private sector loans, which we call the non-sovereign-backed financings. We also offer equity and guarantees. And we are in discussion with internally to launch some newer innovative products, some of which are like the climate mitigation related products called the direct risk equity capital platforms. So these are basically recognizing the gap that we see in emerging markets where we have projects at early stage. For example, in Romania, one of the markets that Nova Wind was looking at, we look at the gap where the project is still at a very early stage, not yet ready for pure senior secured debt financing. So we can offer some kind of solutions for bridging the equity gap for a certain number of years and take the initial high risk exposure. But of course, we need to bear in mind that whenever a bank takes on a high risk development phase exposure, it will have a lot of equity-like characteristics. So these products are under development, and we will be happy to discuss them with wind energy developers across all our member countries. And one more thing, I must highlight that we have very high ENS standards, environmental and social standards to meet, because we follow the international best practices. And they require us to assess, especially for wind energy projects, detailed analysis on the bird migration, biodiversity impacts, etc. So we can actually bring in a lot of good environmental and social governance into the wind projects that we end up financing either through debt or equity modes. And of course, wind investments have another particularly interesting feature for us, being an MDB. We have special linkages to our thematic priorities, especially the technology-enabled infrastructure one, because we see that wind farms are now increasingly adopting a lot of digital solutions and also preventive maintenance. There are so many newer innovative technological products coming up which have applications in wind technology. So we find that very interesting, because if we end up funding a new wind energy project in an emerging country and we also have the technology enabled features in that, then we could highlight it and it would fit in very well within our mandate. So that's all from me, and I think I have my email ID on the slide in case any one of you would like to get in touch with us. We would be happy to collaborate and explore avenues for investments in wind. Thank you so much. Thank you.
Okay, can I ask just one small question? If we compare your financing with the just general bank financing, what's the maybe key differences which will play in your favor, for example?
You're talking about the MDB community in general. So maybe I can speak about the multilateral bank funds. We can obviously offer you longer tenors. We have a well-capitalized base. We are a AAA rated institutions. We can offer you a more attractive pricing. We can offer longer loan tenors compared to those of commercial banks, which they have asset liability issues, and some of them may face some mismatches. And of course, like I said, we have world-class environmental and social governance standards, which are increasingly becoming important after COP26 and all the discussion around Paris Agreement and SDGs for the UN. So I think these are the key things that we would be willing to offer.
Okay, thanks a lot.
Thank you.
We had also one last speaker, but I believe the guys told me that he's not online for some reason. We wanted to talk about pension funds perspective to getting money from the funds, especially pension funds, but just give me one second. Is he online or not? Sorry, for some reason, I guess some technical difficulties, we lost our last speaker. So I guess that's pretty much it. I want to thank everyone who participated, who attended. I guess we had a really good talk here on the wind energy and its future. So we'll see you somewhere else in the field of wind energy around the globe, making projects. That's it, I guess. Thank you.